Okay, welcome to the Swing Trading with Cycles channel. This is where we time the markets without predicting the markets. I know that sounds impossible, but it's actually quite possible. It's called identifying a trend and then identifying the reversal points, whether bullish or bearish. So let's get into it. We're going to look at the S&P 500 here. This is our broader market update. Definitely take a look at the separate videos that talk specifically about gold. There'll be another video about uranium as well. This is the broader market update, which is really going to dictate the direction that most things are going in. So pretty important to understand. If you haven't already, please hit the subscribe button. That'll make sure that you get these timely videos. I do put these videos out at least once a week, but I try to release a video when something sort of eventful happens, which we have today, which we'll talk about. So definitely take a look at the upper right hand corner. Hit that like button. So let's get into the chart. So this is the S&P. This is a daily chart. So we're looking at the daily cycle here. And if you're not familiar with how cycles work, please take a look at the link in the description to the Cycles 101. I actually just recorded a new one. The older one was from early January. The sound quality wasn't great. So that's a new one. It actually focuses on the Dixie, which is very timely. So definitely take a look at that. I'm assuming you've already looked at that content, so you understand what I'm talking about in terms of the acronyms, etc. And so Friday was day 18 of this daily cycle. The previous daily cycle lasted 54 days, so it was a pretty long cycle. We failed. This cycle failed once we went below this low. And there was a lot of talk about a possibility that we could get an extended cycle, right? Like maybe this wasn't our cycle low and we're actually descending into it now. But at this point, at day 18, that would put us on day, what is that, 72 trading days, which is like just, this is probably a new cycle. And I'll add the 10 period moving average so we can kind of, or excuse me, that's the 200 day. This is your 10 period moving average. So you can see it's sloping down pretty aggressively. We are on day 18, so we're getting later in the cycle. And note that the cycle before this one that ended on day 54 actually ended on day 25, so wouldn't be surprised to see a similar count. What I've noted here is this vertical line denotes the next CPI release, which will be next week, October 13th. The last CPI release was September 12th, or excuse me, September 13th, where we had this huge gap down, because those updates happen at 8:30, so the market isn't open then. So you get all this volatility, and then the market opens, having already reacted to the number through the futures. So we're gonna have to see what that brings us, right? My sense is that might be the trigger for some kind of turning point. Maybe it's a daily cycle low. Maybe it's actually a short rally that starts another decline. We're gonna have to see. We also have the non-farm payroll number this Friday, so the jobs report on that's the 7th. So going to be interesting to see how the market reacts to that. So today was day 19, and we did make a swing low. So once we went above the high that marks once we went above the high of the candle that marks the low, which is this candle from day 18. I'll zoom in. So this candle had a low at, what is that, 35.84, and this is SPX cash, and it had a high at 36.71. So we closed above that. We closed at 36.78. That's really positive. That's how you identify a low, right? In this case, this is a potential short-term low because it's a daily swing low. But if we were to get follow through, we would end up getting a swing low on the weekly chart, which we'll talk about when we get to the weekly chart. And so what you want to be aware of, though, is we also got a swing low confirmed a swing low on September 28th when we went above this high. And then look what happened. We made a lower low. So you've got to be aware of this idea of lower highs. Super, super important. So I'll draw this out. I don't want to belabor the point, but like if we think about from the top that we got on August 16th, this is how you might kind of categorize a downtrend. We had this low, then we had a lower high, then we had a lower low, and then this was a really convincing rally in real time, sliced through the 10-day moving average, but we topped out on day 4. So that was a lower high, and then we've come down, and you could say this is another lower high. This candle was bright green at one point, and then we came down, and then we made another lower high, and then we did this. So now what are we doing here? Are we going to break above here? Like something like that, right? Like this was a fake out because we came above this high here. Or are we going to get a double top here and then keep moving lower, right? That's what we're watching for. That said, the levels are like incredibly clear. We have a swing low right now. So you could easily, so what, like you could put your stop at the low of this day and just see what happens. That said, it's still pretty early, and again, knowing that we are getting that CPI number next week, and the jobs number even before that, you'll probably see more of a reaction there. But at some point, you would expect we're going to get a few days rally, like the way we got this day rally. So that's what the market is waiting for, because we need lower highs if we're going to go significantly lower. That's how a downtrend works. Lower lows and lower highs. You will get those bounces along the way. So very possible we get our daily cycle low on day 26, which would be that 1013 CPI print. If we look at the weekly chart, so we are now on week 16. This is just an inside week. We need to break above this candle. So, I mean, zooming in here. Last week, we made a new low on the weekly chart, right? We broke below this low from the last week, that weekly cycle. So this is a failed weekly cycle, which we expected, because once we had our high on week 9 and we started cascading lower, and I'll just draw this out, not to belabor the point, but this is just your weekly downtrend. The same way we just drew that on the daily, that's your weekly. So now it's a question of how high do we go? You would expect we wouldn't go much higher than this candle here, right? So the 38.94 area, maybe even 4,000 if we're going to get another leg lower. But you want to watch, right? What if we get up here, we consolidate, then we break through, backtest it from above? You have to be open and flexible for this to catch people off guard. But you have to just watch the levels at this point. So the next important thing is to move above 37.42. If we were able to do that, this weekly candle would make last week a swing low, right? Again, same exact concept we just talked about on the daily chart. This candle marks a low, right? We made a new low. The high of this candle, once we get above that, we would have a weekly swing low. So we have a daily swing low. That's how price action works on multiple time frames. You have the lower time frames that start the move, and then if you have follow through in the direction of the move, you get that move cascading on the higher time frames. So right now we're seeing if we can get some bullish follow through, that daily swing low will turn into a weekly swing low. And again, it's week 16. It's entirely possible that this becomes our weekly cycle low at week 15. The weekly cycle low before that was week 16. The one before that was 20. And I said this multiple times. This week 16 low threw a lot of people off because that's really early for a weekly cycle low, but you have to just watch the price action, right? And so that 37.42 level is going to be key. You would expect some resistance around there, at the very least, price to react some way. If not, like maybe it starts to base, or maybe there's some rejection, at least initially. That's going to be a really important level to watch. And then if you look at the monthly chart, this is the most significant because we have a new monthly candle, but we also have a new quarterly candle, right? We're about to close out the year. And so just like the weekly candle is starting inside as an inside candle, again, an inside candle is just a candle that doesn't make a new high or a new low. So it's essentially neutral, right? It's not really doing anything yet. But this is a huge range, right? The monthly candle has a high at 41.28. And we just talked about how the weekly candle had a high around 3,900 area. So we need to get above this 41.29 area, right? This line, to make a monthly swing low. And so as you can see in the previous videos that I've talked about, there was a point where we had a monthly swing low on the board. This was our monthly swing low. June was, right? June marked the low, and then we got a high above that candle that marked the low. And so we were looking good. This was a green candle, and then it failed. That's what we want to watch for. That's an important concept. Candles transform, right, before they close. And so right now it's a green inside candle. But if we get a big pullback later in the month, that could turn this candle red. Here's another really important concept to understand. How does this candle turn red? It is incredibly simple. It just has to go below its opening price. And I know maybe this sounds super basic, but I don't think this is something people think about enough. For something to go lower, it needs to first go red, right? And right now we're green, so we need to go red. And again, and you can always see the open high low prices here. And if you don't have a TradingView subscription, I definitely recommend it. But you can see if I hover over this candle, the opening price was 3609.78. So if we move below that level, that will mean the monthly candle goes red. And that's an addition. I mean, there'll be bearish signals even before that, obviously, on the lower time frames. But that'll be your big sort of blinking red light. Uh-oh, got to get out here. Obviously, that could set up a false breakdown. But that's an important idea to think about. So this is month 31 of our 3-year cycle. We had our top on month 22. That was January. And we've been declining ever since. So since the beginning of the year. So now it's possible that this September down candle marked our low for the 3-year cycle. We got it early on month 30. We don't have any evidence of that right now. And as I said, this is a really large range. Like we need to go up another 400 points to confirm a monthly swing low, which is why multiple time frame analysis is so incredibly important. Because by the time we get that monthly swing low, you've already missed a lot of bullish action on the lower time frames, which is why you use those lower time frames as more actionable. And then you look at the monthly for confirmation. Am I green on the monthly or red? Like that gives you a sense of do you have wind at your back? Are you moving in the direction of that longer term trend? That's what that helps you to kind of quantify. So the levels are very clear, albeit we need some patience to see how things play out. And I'll swing over to the other indices so we can just see what those same levels are. So for the Qs, we need to go above 311 to make a monthly swing low, and we're down here at 273. So that's a big move already. And if we think about the bearish scenario, the monthly candle opened at 269. So if we move below 269, that's about $5 lower than here. The candle goes red. Again, that's your big blinking red light. We probably have more wood to chop to the downside. That is my expectation, I will say, until and unless we see some more bullish confirmation. And for IWM, the high of the monthly candle is 189.86, so about 190. So that's about 20 points from here. And then our current monthly candle opened at 167. So just a couple bucks from here. So not a lot of air beneath this one, if you will. And if we look at the weekly chart, it's the same count for IWM. Week 16, it's an inside week. In the case of IWM, that weekly candle has a high at 181. So that's a good example. If we're going to make a monthly swing low, we literally have to make a weekly swing low first. I'll just say that again. In order to get a monthly swing low, you have to have a weekly swing low. The same way you can't have a weekly swing low without a daily swing low. So you'll want to watch for that weekly swing low as your first signal. That's a good level to manage a sort of short-term trade. And then you'll understand, and is the move really going in my direction if we can confirm that monthly swing low. That's the way to think about it. And for IWM on the daily chart, we actually have our low back on day 15. And we've been actually holding above that swing low since then, which is really interesting how it's diverging from the other indices. And for the Qs is the same position. Well, this is important. So the Qs did not make a swing low today. I'll repeat, the Qs did not make a swing low. That is important to know about. SPX and IWM, well, IWM made a swing low a few days ago. The Qs remained an inside day. It needed to get above 275. And so now tomorrow we need to just get above this high, and that would give us our little swing low. And on the weekly, we need a high above 281. So that's only about less than $10 above here. That would give us a new high on the weekly chart. And also, again, importantly, that would make this week 15 a swing low. Possible ICL. I don't think that's very likely. I think you'd be prudent to wait for more confirmation. Though, doesn't mean one couldn't enter a really short-term trade, have appropriate stops, because right now we are moving in the right direction. That said, and this goes for all the indices, remember we got this one green candle and then we got the move lower. So we'll have to see, do we get rejection or follow through tomorrow? For what it's worth, let's just pop over to ES, to the futures, and we're getting follow through. That's helpful, right? So we've almost made a new high. This is the daily chart for the futures. And if you look structurally, and the numbers are going to be slightly different here because the futures contract is actually trading a little bit higher than SPX, much higher than usual in terms of like that the divergence. And so you'd really want to see the futures get above 37.54. We're at 37.13, so we could see a move above there overnight. That would be a really bullish sign, showing you that you're making higher highs. And then we want to see if we can hold a higher low from there, obviously. And so that's the lay of the land for the broader markets. As I mentioned, definitely take a look at the links in the description for additional content. Important to kind of see how all the pieces fit together. I do suspect we're still in that 3-year cycle low, or I should say we're still declining into the 3-year cycle low. And so you want to watch for the big turn, the signal on the higher time frames that we've made the low. And that theoretically, we should have a rally that lasts many months. So you don't have to worry about missing it. That's what I mean by timing the markets, right? You can get a sense for, we're relatively early in a new long-term cycle, so I can get in now and enjoy months of upside. And I didn't have to predict anything. I just watched and I reacted. That's the way to think about it.